The seventh reactive change strategy is cost cutting, which actually includes a few things that we've already done. We're just going to put them under a different sort of banner or heading. And it's grouped under the section where we said, let's change the finances or the way money is spent or where it is spent in the business. So what is cost cutting? Well, it's just anywhere we cut costs, obviously, but some specific ways. So we've learned in the past about redundancies. So that's a job is redundant when the position the employee has is no longer required by the business. So basically the business decides we're not going to perform this task anymore, and it might even outsource it to another business to do for them instead. So that could be one person's job, it could be an entire team, an entire department, or even a whole market or region is no longer required by a business. So some examples. Pizza delivery businesses, once upon a time, like Domino's, used to hire hundreds, if not thousands, of delivery drivers. And each of those delivery drivers, you had to pay them a wage. Superannuation, payroll tax, you had to provide staff amenities and facilities, etc. And yeah, they actually just used to work for Domino's. They would only deliver for Domino's. And then the pizza businesses kind of realized that that wasn't cost efficient. Those jobs probably don't need to be within Domino's because some nights you're not going to need as many drivers as you normally do, but you've still got to hire them on the payroll. So that's been outsourced now. So a lot of most pizza delivery businesses now, those deliveries are now outsourced to Uber Eats, Menulog, DoorDash, and all the other ones. So that is how a job is made redundant. So not as many, there are still delivery drivers with Domino's, but not as many. Another really good example of this is Apple. So we've learned that most businesses have some sort of common departments or areas of responsibility like human resources, IT support, operations, finance, sales, and marketing. Well, many businesses, including Apple, say, why don't we get other businesses to do some of these? We keep some of the core ones, but we outsource a lot of them. So, for example, we've learned that Foxconn actually makes the phones. Foxconn is a different business that's been outsourced. KPMG could do the finance, so they could take care of all the accounting and preparing the financial reports. And usually most big businesses outsource their marketing to an advertising agency such as Ogilvy's. So that's one way. Another way is automation. We've learned what that is, replacing human activity with or inputs with machinery, technology, robotics, etc. You can also cut costs with just in time. So just order what's immediately required in smaller batches. So we're going to save a lot of expenses on warehouses in terms of buying them, rent, wages, storage equipment, insurance, etc. So we can use that as a cost cutting example. Our lean production, where we said there's sort of 5 key things there, or 5 principles, and each of those is designed to make the business lean to reduce its cost base. What we're interested in more so for this topic is, can you get some KPIs? So we say this year, how did we go last year? There's some KPIs. Which ones do you think cost cutting would improve? And it could improve any of them, but we could probably focus on these ones here: percentage of market share, number of sales, net profit, productivity growth, and level of wastage. Why? So, well, what we could say is cost cutting things like redundancies, outsourcing, automation, just-in-time lean production, that will increase the efficiency of the business because we're going to get rid of the number of inputs. So it could be less humans, for example. That will increase productivity. Now, when we do that, we're going to reduce costs. And when we do that, we can reduce the price of the product, or maybe we can keep the price the same and make higher profits. But either way, that is definitely, if we've got lower prices, we can improve percentage of market share, number of sales, and we'll sell more stuff. So we'll increase net profit too.